Okay, so we're going to look at Eurusd with smart money concepts in mind, starting from the 9th of July, 2021. But first, to understand what to forecast or read from price in the future, you have to look at what happened in the past. So as you can see, I've already pre-annotated some parts of the chart I'm going to explain. And then the remaining bits are just left naked, and we'll just touch on these as we go. So starting from here, following the previous video, we can see that on a daily time frame, price has been bearish. So now we're going to be looking at price action purely from a technical perspective, as we know fundamentals play a part in Forex as well. But looking at it purely from technical perspective, we're looking at price action from the 9th of July to current date, which is the 16th of August, starting from this position here. So we'll be looking using the 1 hour time frame and the 15-minute for this analysis here, for this outlook. So starting from here, price trades lower, and we create this low right here. And this is the high right here. So this is our high, and this is the low that follows after the sell-off. Then we can see moving forward, the price retraces, forms another low, and then creates a high over here. Now you can see where this high was created was a reaction from this candle here. This last up candle the white candles, the last up candle, which is here before this sell continuation, the sell bearish movement right here, price retraces back to it, reacts from it, and then you can see just as you have this up candle, the white candle, and then a series of consecutive bearish candles, you also have the last up candle right here and a series of bearish consecutive candles. So those type of areas are areas that you want to call points of interest. Smart money concepts terms them as institutional candles. Some people say institutional funded candles. Either one you want to use still applies to the concepts. So moving forward, a key thing to understand when trading with smart money concepts is the timing. Just as it is all well and good to analyze the price, you also need to analyze the time. So as this is Eurusd, the London Open is an important time for this pair, just as it is for GBP USD and also other instruments that you can trade. But for the main two, GBP USD and EURUSD, the London Open is known to be a very key time, which is at 8 a.m. So on the hourly time frame, you will see, if I'm starting from here, observing price at 8 a.m., you want to observe it at the hour before, which is 7, and the hour afterwards at 9 a.m. So you create that 7, 8, 9 a.m. window to observe price and see what it does, and then do what you gotta do accordingly. So right here, this is 7 a.m. 8 a.m. price sells off. 9 a.m. we have a continuation of that sell, and you can see the volume in that candle. These last two candles at 8 a.m. London Open and 9 a.m. An hour after London Open, it sells in play. So we then break below this low. Like I mentioned before, you want to look at the lows from the bodies of the candles, not the wicks. The bodies are where the main volume of trading is being done in. So I use the bodies of the candles for my confirmations of structure levels. So this is the low right here. We formed a high over here. Then price sells, break below that low, and we now have a new lower low at this level. So simple terms, this is what we call a bearish structure when price is making lows, highs, lower lows, and lower highs, like so. Moving forward, we can see the price then retraces from 2 a.m., which is another important time, as this is during the Asian trading session. If you backtest this, you see at 2 a.m., a lot of significant moves in price happen. Like I said, as long as you analyze price, you also want to analyze the time. So from 2 a.m., a good hour to observe the market, we see price then starts retracing from that level where it's made its low, and then we trade higher. And now to the focus point of this video, where we're starting from, we get here at 8 p.m. So now this was the week ending of that week. So this was the Friday of that week, I believe. That's why you notice on the time frame below the charts, you see it goes from 9th of July to 11th of July. So this would be the Friday evening when the market closes for the week, and then 11th would be on Sunday, 10 p.m. UK time, when the market opens. So, like I said, we're observing this from the 1 hour time frame and the 15-minute time frame. So now we've gotten and traded up to this point of interest area that we identified. And bearing in mind, observing the price action throughout the previous week, we understand this is a bearish direction of price being in play right now. So sells are the most common, sells is the most logical thing to be looking at as price action is suggesting. Now, market opens on the 1 hour, it looks like you can't really see much because it's quite consolidated. So go on the 15-minute and observe price. This is where we are. So on the 15-minute, like I mentioned, the retail concepts that people usually start to learn, those are mostly just concepts that generate liquidity. So for example, this is a pattern or flag, if I remember right, that people look at and they expect a breakout, retest, and then a breakout. But like so, we have that flag pattern being created. Price at 2 a.m., price starts moving up, breaks out. Like I said, 2 a.m., this candle is a candle that breaks out, and that occurs at 2 a.m. Like I said, key times. So the candle breaks out, the following candle remains bullish, and then we immediately slam back down. So the people that were doing breakout, retest, and expecting a continuation of that breakout, they would have been taken out, stop loss hit. But the people who, didn't take the trade, they will save their money. Then moving forward, price then instantly reverses after breaking out. So that'll be a false breakout, as they say. And then trades lower. Now, even so, just noticing this probably looks like, so like a trend line that was going on around here. So price bounces off there, comes back there, and then price just slams through that and then reverses. So you notice how once in these two scenarios, price swipes liquidity from the trend lines and the flags and the patterns that are being created, and then price will flip. And you should take note that those movements aren't by accident. So I'll just change that color to green. Then price then comes back, forming a trend line, or people could call this a support right here. 1, 2, 3 touches. So bounce up the support / trend line. As we have identified, this is also liquidity being generated, because you're going to have people with stop losses, within this range, as I see this as a strong support. But this is just a trap to, get people to risk their money, which is going to be swiped later. So price hits that area, and then we retrace off, and then price reacts at this level. Now, this is from London Open, this candle right here, 8 a.m. But you can see 7 p.m., this is the candle for 7 p.m. And 7 p.m. is when we swiped that trend line that was going on. So like I said, you want to observe the time before London Open, an hour before London Open, and an hour afterwards, so 7, 8, 9. So from 7 p.m., we can see price then starts trading lower to swipe that liquidity and to generate more liquidity by forming another trend line right here. And then 8 a.m., that's when price reverses. And then where do we get to? At 9 a.m., this is a 9 a.m. candle right here. We then come back into this candle. And we take note that this is the candle, or the series of candles rather, that swept liquidity. We come back in that area during London Open, and then from 9 a.m., we start playing bearish. And then we sweep all that support resistance level. Look at the amount of volume in this candle. Insane. Then price then trades lower and reverses right here. Well, why does it reverse right here? Obviously, it's not random. If you look to your left, you can see we have an area of interest right here. This is the last down candle before a series of bullish candles. And price comes into that area, touches it right at the candle open, and reverses. So price then reverses, temporary bullish momentum. And we can see here that I've pre-annotated, as price was trading lower from this level, it was generating liquidity, throwing wicks at a certain level that you would have said that's your support, that's your resistance rather. Your resistance ceiling, then price comes right here, sweeps that liquidity, and then starts trading low. So we're seeing that same pattern again of price sweeping liquidity and reversing. Sweeping liquidity, reversing. Right here as well, sweeps that liquidity, that wick goes just above it, and then reverses. So timing as well. The New York Open is at 2:30 p.m. on UK time, GMT. And if I take note of that on the charts, that would be around here. So typically that is a time you also want to be observing price, but as you can see here, nothing dramatic really happened. So I'm just gonna ignore it for now, to be honest. And oh, even right here, these wicks as well were swept. So you can see two levels of liquidity being swept all at once by that huge wick. Then price retraces, sorry, price then reverses, comes back, and then we start self-consolidating slowly into a bullish momentum. But you can see there's no significant volume in any of these candles. You can see how small they are. But at the same time, they're still generating that trend line or support level. And then price trades up here. And this is sort of like an imbalance fill on the 15-minute. You can see this little imbalance right here. And then price comes into that imbalance, fills it, and then we continue going lower. So as you can see, the last up candle, and then following consecutive bearish candles, those are things you want to take note of. Then, right here, you can see this isn't really good price action you want to be involved in because there's no direction and price is pretty much just in the same area, like so. But with smart money concepts, you can understand what you're seeing. So we see bullish, bearish, bullish, bearish, price comes, sweeps above that nice equal highs right there. Sweeps those equal highs and then reverses. Same pattern we're seeing again. Those are the areas you want to be paying attention to. So following price. Now this is also regarding timing. This is 7 a.m. So from this hour, from 7 a.m., price starts playing around, consolidating. And then 8 a.m., London open, we start being bullish, sweep liquidity, and then we flip direction. So see how price action tends to play some interesting moves from 7 to 8 a.m. to 9 a.m. as well. So now 9 a.m., this is the hour. We have some little bullish price action, and then price continues going lower. So this action right here is quite interesting. You'll see this looks like we have a trend line going on as well. Right here. And we can see price just wicks above it and then reverses. Literally the same thing being repeated over time. And we can see we have that huge bearish candle, couple of consecutive bearish candles. Price retraces a bit, fills in some of that imbalance. Typically, you want to see price fill about 50% of that imbalance. So, which it does, that's the 50% mark there. And which does fill that imbalance. Here's the 61.8 level. That's not really important. But. And then we start trading low. So moving forward, we then make a lower low. As on the 1 hour, this was the previous lower low. So going back on the 1 hour, this was the previous low. Then we've made a low low, confirming our bearish stance on the market at that current time. That's the low right there. So on the 1 hour, nothing is clear. So on the 15 minutes is what we're going to be looking at. So yeah. So right there. So analyzing price, what does it do? So just looking at it from here, small random bullish candle, then we trade lower, and then price starts trading. But you can sort of see it's just within this one candle right here. Price is just trading within that candle. And then it forms a low below that candle's low, structure-wise. And then we start trading higher. So price then does its thing. Now, if I look at the timing, at this time of the day, you don't really want to be looking at positions because this is 12 p.m. midnight. Not many people are going to be trading. Not a lot of volume to be expected unless you have news and other fundamental aspects in play. But we're looking purely at the technical side of things. So price starts moving bullish from here. And you see that 2 a.m. timing. We have a nice bullish candle. Continuing up. We can see price then retraces down here back at 10 a.m. But prior to that, we can see where's the time. So 7 a.m., an hour before London open, this is where we are. Then we start trading like so. 8 a.m., nothing much going on. Still within that area. 9 a.m., still within that area. So to me, it just looks like liquidity was just being created right there. And let's see. Not really a clear trend line or anything going on there. So price at 10 a.m. comes down here. Considering how fast and how huge this wick is, it was probably due to a reaction to news that caused this. I'm not entirely sure. But then we reverse, imbalance created here. On the 15-minute time frame, and we continue going bullish. And price trades higher up until what point we get here, create a little structure within structure, which we'll cover on a different day. This is a high, low, high, reacting of this candle here. From the low, but you have to realize if price from this sell didn't break this low here that we identified, then it's not in a bearish format or in a bearish structure. So price only came, reacted off that last down candle before the up move, and we formed a higher high. And that higher high looks like it was forming a resistance / ceiling right there as well. And then price trades off from that level, breaking this low and breaking this low. Then we can see what we're working with. So now price is traded from this level in the bearish stance, breaking these lows. But you can observe as well the timings of things. At 7 a.m. is when we get to this price points where we have such a large bearish momentum in the market. So 7 a.m. we trade lower. 8 a.m. we then start reversing, and then 9 a.m. we get to a point, and then the market goes bearish for pretty much the rest of the day. So this is a very important point, observing the time and price action of the markets from 7 to 8 to 9 a.m. Then moving forward after this bearish momentum, price then starts playing price action. At first glance, nothing here seems clear, but understanding structure and smart money concepts, you develop a better way to read the markets like so. So I've annotated this trend line here. Now, looking at timing at 3 p.m., it's at 3:30, the price does this. So now it trades lower. Typically from 6 p.m. onwards, I don't really expect much to go on in the markets, and you can see prices really not traveling anywhere from that point. It's just ranging from 6 p.m. But observing the price, this would be a high. This would be a high right there. Low, lower high, high, low, lower high, and then that's a lower low. So the highs are continually making lower highs, but the lows aren't really correlating or in any clear direction. But you can clearly see that liquidity being generated there, and then right there. And if I look at the timing, so this is then from 7 a.m. This candle here, this bearish candle from 7 a.m. price starts consolidating that area. 8 a.m. this candle sweeps above those highs. So it takes out that little, those equal fairly, that level of liquidity right there from the 7 a.m. price action, sweeps it out, and then reverses, comes down, forms liquidity right here. 1, 2 touches. 9 a.m. reverses, sweeps out that trend line, and then the price then comes back and sweeps that liquidity. And you will observe that every time in the examples we've seen, liquidity is swept right here, price reverses. Liquidity is swept right here, price reverses. Now, understanding structure, knowing this levels, this area is created with just liquidity, we can see after this sell, following this buy, so this low and this high are the important places that we're going to observe. Price then breaks below, forming a lower low from the previous low here. That's a bearish indication. So what can we expect? Price to retrace to a point of interest, which was this last up candle before this consecutive down candles. Taking a look at, risk and stuff, if you want to use the whole area, that's about 8 pips of risk. And then the price starts trading lower and forms another low, a lower low. So that is where we will stop for now. Until the next video, have a good trading week.